Everyone's bracing to hear what the Fed minutes have to say. And as well, this is happening at the same time that the Nasdaq exchange has refiled its application to list BlackRock's proposed spot Bitcoin ETF, joining rivals in naming Coinbase as its surveillance partner. What does this all mean? Well, joining us now to discuss is Matrixport's head of research and strategy, Markus Thielen. Markus, welcome.
Hey, thanks for having me.
Glad to have you on again. So let's kind of step back a second here, because we have today we expect the Fed minutes to come out. And while that doesn't necessarily sound like it's something that will affect crypto immediately, nonetheless, it might give a sense of where people are seeing risk situations going. How do you position yourself over the next few minutes here?
Well, the next few minutes. I mean, we are quite bullish. I think we came into this year being quite bullish, and especially, as you said, because of inflation expectations. I mean, it seems to me that the Fed is really turning. They're not really admitting it yet, but I think, inflation has dropped sharply, and I think there's no need to be as hawkish as they have been earlier in the year, because also the CPI is actually now below the Fed funds rate, so there's no need to really hike rates anymore. And I think the market has really sniffed this out. And this is why, tech and crypto has really rallied so strongly this year.
It has done all that, yet it seems that every time there's a camera on, Jay Powell keeps saying, "I'm going to raise rates." So it's sort of like, I'm wondering if perhaps the markets aren't taking the Fed seriously enough.
Well, I mean, historically, right, the Fed has been, you can almost say always wrong, right? They always need to adjust, right? They were very late in really hiking interest rates when inflation was already sky high. They're just really, far behind the curve. And I think a lot of people looking now at, of course, the Jackson Hole meeting end of August for the Fed to kind of, change really their stance. But again, right? I mean, do you really need, do you really need interest rates at 6% when inflation, year-on-year inflation has dropped to 4%, really from all the way from 9%. And, when you look at energy cost and everything that's really leading inflation, inflation is most likely going to drop to 2% this year.
If the Fed is always wrong, and yet, I guess the market is trying to expect them to be more rational, if you will. But if the Fed is always wrong, and they're seeing this and saying, you know what, we don't care if inflation is at 4%, our number is 2%, we're going to keep going until that happens, even if it blows up the world. I mean, it just seems like that's where we're headed. I'm still trying to grasp this idea that the Fed will act completely rational, if you will, or at least the way the conventional wisdom market consensus has been, and not what they're saying they're going to do.
Well, I mean, the Fed is trying to cool the housing market, but of course, even at these, high mortgage rates, the housing data still looks very strong. So I don't know if the Fed really needs to go and really try to break the market, right? In the end, I think, they have paused now, and they have consecutively hiked over the last 12 months. But, but the pause, they're really going to restart it. I think we have, of course, seen some central banks around the world, especially, in England. But England is very different, right? The UK has, of course, a very different inflation problem after Brexit and so on. So this is very different. And I don't think the Fed needs to re-hike again. And I think the market is just really, expecting this.
Let's talk a little bit about this weird paradox that's happening right now. You have the SEC cracking down, and then you also have, BlackRock, et cetera, applying for spot Bitcoin ETFs. What do you think BlackRock knows that we don't? I mean, it seems like they're probably not just doing this like on a lark, right? They probably have some sort of information or some sort of conviction. Well, how do you interpret this?
Yeah, they must be very confident around the market and the price surveillance aspect of their application. And I think this has been in the past really been the key point and being voted down. So I think the likelihood seems to be quite strong, and especially because they were running also some, like a private ETF for some of their private wealth clients. So I think they have enough experience, and I think they're bringing this to the table really in running like an internal, BTC ETF basically. And I think, they're going to get the applications through. And I think we have already seen how fast really the SEC has sort of like reacted and like, oh, you need to adjust a little bit the application. They're doing this. I think they're working really together. And I think, the one lesson really from all these crypto bear and bull markets is really there are like, 420 million people who hold cryptocurrencies. And even after all these, debacles and bankruptcies last year and, all these crimes, basically, there's still a lot of demand for crypto. And I think the regulator has really realized this. I think the regulator is trying to throw a bone towards the crypto industry, and I guess, frankly speaking, and I think that's why they're going to allow this Bitcoin ETF, and I think they have already said around the world really that BTC is really like a commodity and should not fall under the security questions.
Markus, if this ETF gets approved, which it sounds like you have a positive outlook on, what do you think is going to happen in the markets?
Well, I think BTC is just going to rally. I think there are various other factors as well. When you look at, there's around like $100 billion in gold ETFs. There's probably another, 10, 15 billion in silver, some other commodities. None of these commodities pay interest rates or like a yield, but there's still so much money in it. And I think the other aspect, and we have done some work on it, where we took basically BTC and like on a Black Litterman asset allocation model, and for diversification reasons. So suddenly, if you have an ETF, asset allocation managers can put it in their portfolio, have it for diversification. It's probably part of the alternatives in our view, not part of the the tech exposure. And I think suddenly people can really again put it in their asset allocation strategies and put it in the mix of ETFs that they can be trading.
You note that bullish Bitcoin investors are preparing for a seasonal surge. Tell us a little bit more about that and your expectations for July.
Well, July, the market is quite bullish, right? So you had, for example, over the last 11 years in July, 8 of those, Bitcoin actually went up. But there's also like a lot of like other seasonal factors. Bitcoin actually has done really well in January, and this happened like 6 times, and 5 out of those 6 times, Bitcoin, continued to rally. The last 2 times it even doubled. So I think there's actually a really good period coming up for Bitcoin. And again, I think, people forgetting about all these like negative headlines, from the Binance SEC and Coinbase SEC lawsuits. And I think they're focusing really on the ETFs, and everybody's like asking themselves how much money is going to come in, how long can it take? And, the expectation is really that at the shortest it's going to take like 45 days, or maybe it's going to take 80 days. But I mean, this is going to bring us, towards the end of the summer. And I think people are preparing for it.
And lastly, analytics firm Block School says Bitcoin is no longer correlated to U.S. stocks. Do you agree with this?
Well, I mean, it's just math, right? I mean, you cannot really lie with math. I think, I don't think I don't think it really matters too much, right? I mean, there are different investors. I think, you can use Bitcoin for diversification and everything, but I think the demand is just simply there. And, as we have heard from Michael Morrow, I mean, there's still like, a lot of demand to set up exchanges and for people to trade some of these main tokens and coins and everything. So I think the demand is simply there. And I think the money will just gravitate to whoever, opens up the market for like a really, protected way to get exposure.
Markus, thank you very much for joining the show this morning.
Thank you.
That was Matrixport's head of research and strategy, Markus Thielen.